Hello, everybody, and welcome to Coach's Playbook. We've been spending the last 8 to 10 minutes trying to decipher the new CME limits for equities. But first, before we join you in on the conversation, Mick, do you have a trader shout out for us?
I do, Jack. Big shout out to Jacqueline Pickarainen. She made about $1,900 trading the NASDAQ today.
Nice. Always good to see a fellow Jack name throwing down some money. Anyway, today we just learned, was it Dan or Mick who brought up that the CME is changing its night limits in a pretty significant way coming up. And the catalyst for that is probably that we expect a lot of volatility coming in this next month. So Dan or Mick, who wants to give the first overview of what this all entails?
I will.
I'll leave it to Dan. He was the one that pointed it out.
So as everyone kind of knows, the equity markets were pretty much hard limits. They were, overnight session was a 5%, during the day 7%, and we had hard percent numbers. If you guys remember a couple months back when we started talking about limits and circuit breakers, because they kind of were a thing of the past, we forgot all about them until March hit. Crude oil was one of the ones that was slightly confusing. It is a dynamic circuit breaker. Well, the equities have introduced a dynamic circuit breaker. So this is going to be really interesting. So in the overnight session, we're going from the first hard circuit breaker in the overnight session was originally 5%. That's where it's at right now until October 12th. That's going to open up to 7%. So just like our regular trading hour, 7% limit, but where it gets different, instead of having more hard circuit breakers down below, we're going to be having a little bit of, I guess you could call it a trailing stop of sorts. It's a 3.5% dynamic circuit breaker. It's going to be a rolling 60-minute period. So if at any point during a 60-minute period, not on an hour, but within a 60-minute period, if at any point the market moves up or down 3.5%, we're going to go lock limit for 2 minutes, and then the market will go ahead and open back up, and we'll continue to hold that 3.5% dynamic circuit breaker. It's confusing. It's strange. It's going to be weird. It's tough to calculate, right? And so we're going to have to be, as traders, we're going to have to be extremely cautious. We're going to have to be conscious of that. And you know, where it gets confusing is a lot of people think, okay, we added 3.5%. So if we hit that 7% circuit breaker, the next one we're going to look at is at 10.5%. That's not going to be the case. It has to be a rolling hour. So let's just say overnight, every hour, every 60-minute period, the market goes down 3.4%. No breaker has been hit. That market can continuously drop lower. So we can have overnight sessions that are going to show possibly 20% plus down nights without hitting anything other than the 7% circuit breaker.
Some algo guy just had a eureka moment listening to you there about the 3.4% over and over again. On one hand, would you point out, explosion. Before I throw it over to Mick or Hogue, like on one hand, I get what they're doing. It is kind of a weird system, right? That during the futures market, you could open a futures session down 5% locked, and then it just sits there, you know, for a very long time. Nobody knows where it's going to go from there. That's probably not the most efficient way to do things. I think this is probably a sign that they are gearing up in advance for the volatility we're going to see around the election and subsequent things like that. They don't want to end up, you got to, you know, get your ducks in a row so you don't end up like Interactive Brokers losing $100+ million when oil goes negative just because you weren't prepared for it. So Mick or Hogue, do you have anything to add as far as what people should be aware of around this?
Sure. Well, like you said, they're gearing up for, you know, coming volatility. I think that's accurate. I think what they're doing with these changes in the limits is definitely putting the market in a place where we can have greater price discovery. Now, is this more complicated? Absolutely. Do I like this? Not at all. Does this make me more concerned for, you know, us as a firm and our traders? Yes. And just, you know, having found out about this morning, my biggest suggestion would be, and I'd like to have some more discussions around this, but that first hard limit of 7%, with these levels that the equities are priced at right now, a 7% move on a points basis is enormous. And I'm sure a lot of people are going to be wondering how this our top step trader don't trade within 2% of price limits kind of coincides with this. And my suggestion would be, don't trade within 2% of the 7% price limit. And then after that, I mean, if we are beyond that 7% price limit in dynamic price limit territory, I don't think it's a good idea for anybody to be trading. I think there's way too much risk involved in that. So this is something that's a little worrisome to me, just from the added risk and the added confusion. I mean, this doesn't, even resonate, completely with me. So that's my take on it.
Yeah, as far as trading after that, you got to be wondering what sort of event would lead to the market being down over 7% and then trading after that.
Right.
So I'll throw it over to Hogue. You look like you wanted to say something.
Well, yeah, I'm with Mick and all of you where, this is a little bit frightening. It's a little bit confusing, but I understand what I think the exchange is doing. Like Mick said, I think it's greater for price discovery. However, it's going to make things a little bit more risky when volatility does strike. Now, the 3.5% dynamic limit is going to allow the market to, I believe, move more freely. It's going to hopefully curb some of the emotion/panic of a major move like this, and at the same time allow participants to get out if they need to. And that's where your hard limits become a problem. If you get to a 7% limit, you're not getting out until it reopens, and then you're at the risk of the next solid limit, which then again may not let you out, and you may end up just stuck in that position. In the grains and in the meats, it happens a lot. You'll have periods where the market could go limit up for 3 days, and if you're short, you're stuck. So while the dynamic price limit is confusing, and again, scary, I see what they're doing. They're trying to allow trade to continue, but at the same time, try and curb some of the volatility, some of the emotion that causes these markets to crumble. I remember in '87, I mean, everybody was scared to death. There wasn't a bid in sight. But with the 3.5% dynamic limit, they're still going to be limiting some of that emotion and some of that price action, and at the same time allow participants in and out of the marketplace if they want to. Again, it is confusing. Again, I'm not a big fan of it, but I understand. Believe me, when the market's that volatile, I'm not a big trader. I don't have huge money in these markets and need to get in or out of those positions. I'm probably going to be sitting on the sidelines by that time.
I'm going to be snoozing, counting sheep at that point.
Right. So, it's a way to allow trade to continue while still attempting to curb a degree of the volatility that may come our way.
Yeah, I think that's a good synopsis of it. I can't imagine. I think in part because we're going through this time right now where it's not often that you have a predicted period of volatility. It's quite high in the options market as far as the election goes. And you can see how under the old system, similar to what you said with the grains, is it would be terrifying to, you're sitting at that limit all night, that 5% limit. It doesn't expand until the morning. I mean, with the ticks right now in the ES, 5% would be, let me do some quick math, I don't know, like 170 points or something around there, right? Could open up more than 170 more down. I mean, there's just no way to know. So I think it's a good idea. At first I was cynical and snarky saying like, how is the CME going to make more money out of this? But it does seem to serve a purpose.
Right, it makes sense.
Yeah.
If we go back to, earlier in the year when we were hitting that 5% in the overnight session and watching whether it was you or someone you knew or the stories you heard about traders stuck in those positions, I can't imagine the anxiety, the stress that's involved with being forced to be stuck in a position and not be able to get out. Again, that's why we always say be flat when you can't control in and out. But there were plenty of traders out there that got stuck in these positions. They couldn't get out. They had to wait for the open. And a few of those times, there wasn't even a single trade. I mean, it just went right to the next limit. It opened up at the next limit. The market locked again, and the market locked again.
Stuck.
And they're still stuck, and the market just continues to push lower, and they're watching it go again. So this dynamic limit's opening up that opportunity, like John said, allows people to accept some of those losses, get out of that trade, and maybe try and get some sleep, not create that stress that can come along with some of this.
Sure. I've been in it, not in futures, but short individual stocks before. And there's just no worse feeling in the world than something happens and you know it's going to completely, I'm trying to say this without saying a word that we can't, it's going to completely smash you, let's just say. And you don't have any idea how much, but you know it's going to be bad, and you're just kind of sitting there waiting for that open. Terrible feeling.
Absolutely.
So is there anything else we want to say about the volatility, since this is kind of dovetails from the volatility we're expecting the next month? Is there anything anyone wants to point out about that as far as people planning their trades? Don't all answer at once.
Well, I think regarding these new changes in price limits, I just want everybody out there to know, I think we're going to probably, draft something up and send it out to everyone with a little bit more information around these. Volatility breeds opportunity. We likely could see some more volatility coming into, being in the fourth quarter of this year. So the market should be, ripe for opportunity, but, with greater volatility comes higher risk, and we just need to manage ourselves and play very, very smart when we're stepping into those waters.
Yeah. And on the volatility, we might see some this evening. We've got the first presidential debate coming up. So that could lead to some interesting volatility tonight. And hopefully we don't see the current breakers hit by any means. But I think it's going to be a really interesting October as we kind of come into the month here. And you know what? As traders, we love volatility. If we can manage our risk, we've got great opportunity ahead of us. And that's what I'm excited about. I think any trader, as long as you manage that risk, is you can control the things you can control. We can control our outs. We can control where we call it a loss, where we call our day. We can control those things. And so focus on the little things you control, trade the volatility here. And I think we can all have a really fun month.
And I think it's important to remember, with great volatility comes great responsibility. If you don't understand the situation or the limits or things like that, think about, before even entering, the fact that you may be a little confused. Just taking a look at the volatility index here, it's up about 3.5% today. Just looking forward to the debates this afternoon, or this evening, I should say. So it's going to be.
I'd be interested to see what could possibly cause the volatility during the debates. Short of one of them ripping off their own face to show they're a lizard person or something. Like I would sell that on the debate. I think the election is going to be.
It's Don the comb over Trump against Joe. The thing, Biden. It's Brillo in Ohio.
Yeah, we were originally going to go out and cover back before COVID. Dan and I were going to go. This debate was originally supposed to be at the University of Notre Dame, and Dan and I were going to go out there to talk to people there, which now seems like just a crazy thing to expect to happen. Yeah, that was on the content calendar.
Oh, wow, that would have been fun.
See you in 2024.
Before we get sidetracked, just want to give some hellos here. Alan, Cal, Nick. Alan's asking, changing the rules for combine and funded accounts because of the new breakers and expected volatility. Obviously, we touched on that. We'll definitely get some more information out there. Frank, why you guys don't use Dash Trader Pro platform? Can't say I've heard of that one, but you know, submit a request to support and maybe we can look into it. And then also hello to Subconscious. Just want to say hello to everyone.
Hello to your subconscious. Sounds very trippy. That's cool. Well, I guess that's all we have for now. We'll send out some more information to everyone regarding how we'll be amending the rules or whatnot regarding these circuit breakers. But in the meantime, we just thought we'd discuss this high level so that you all knew about it.
Yeah.
But I think we'll probably just leave it there for now, unless Dan, you have a quote for us today?
I got a quote.
All right, let's
it's
hear
from
it.
Winston. It's from Winston Churchill. I really like this one. It's a pessimist sees the difficulty in every opportunity. An optimist sees opportunity in every difficulty.
So true.
That's a good one. I like that one quite a bit. Hadn't heard it. New Winston
Yeah, me
quote.
neither. I like that one. It was a good one.
Nice. Well, in light of that, I think it's a good time to head on out. So, Hogue, if you can conclude this session of Coach's Playbook.
Sure thing. You know, these changes are a little bit confusing. If you are confused by them, don't be afraid. Most people are going to be confused by them for quite some time. The dynamic limits are confusing and challenging to be able to expect and to anticipate. Just remember that, you know, if you don't have the guns, if you don't have if you're confused by it, don't play it. But as for today, we're not by any limits. Opportunities are out there. Get out there and profit, trade well. We'll see you next time.
We'll see you next week, guys. Have a nice weekend. Actually, it's only Tuesday. Have a nice weekend.